What you're about to hear could save you over $100,000, 20 years of monthly payments, and give you a peace of mind worth more than both of those things. I'm Aaron Keys. I want to tell you about the all-in-one loan. Here's how it works. Most homeowners have a mortgage that's costing them every month, interest, and they also have like liquid accounts, checking accounts, savings accounts, stuff like that, that's earning them very little interest. What the all-in-one does is it combines those all into one, and it only charges you interest on the difference between what you owe and what you have. So let's say that you had $50,000 sitting in a savings account. Well, that's not earning you hardly anything, maybe 0.5%, $250 a year. If that was sitting in an all-in-one, compared to a mortgage at 5%, it's gonna save you $2,500 a year, 10 times more by being in this account. Let's run a scenario and you'll see what I'm talking about. Say a family buys a home, they make $120,000 a year, they spend 80% of their income every month, and they get a $600,000 home with a $450,000 mortgage. They lock it in at 5%, and they're feeling pretty good. They've got 50 grand sitting in savings, and they find out about the all-in-one. By upgrading that conventional loan at 5% fixed into an all-in-one, even using historical averages for interest rates, that family will save more than $300,000 in interest over the life of the loan. Now, because it's a variable rate, sometimes people freak out and they're like, in a variable rate, isn't there a chance that I'm gonna pay a ton of interest? Yeah, there's a chance. In your fixed mortgage, you're guaranteed to pay a ton of interest. In the variable rate, it'll only go up so high. And so let's say that goes even higher than it is now. Let's say it goes up 2 more points and we're up to like 9.3. Still 9.3 in the all-in-one compared to 5% for 30 years. You'll still save over $130,000 in the all-in-one and pay the house off in 13 years. You just saved 17 years of monthly payments. That's massive because oftentimes people are like, I can't think that far. I don't know, that's not how my brain works. I'm planning on being in this house about 5 years and then moving on. All right, what happens if you do 5 years in the all-in-one and then you sell the house? In that case, what we just looked at, if you stay in the 30-year at 5%, over 5 years, you'll pay $38,000 towards your principal. You'll still owe $412,000 of a balance on the mortgage. Sell your house, you're not making that much money. In the all-in-one, you owe less than $300,000. You're profiting more than $100,000 when you sell that house compared to what you would have made in the conventional loan just by upgrading the loan. It's pretty incredible. You didn't have to make more money, spend less money, or anything like lock up your cash, in your home's principal. You didn't have to do any of that. Just by upgrading the loan, you are rapidly accelerating your equity. That's big because every dollar that goes into your home's equity appreciates, and every dollar that goes to interest evaporates. The more money that we can put towards principal, the less we spend on interest in the all-in-one. And because it's all liquid all the time, there's no reason to hold money back in some non-interest bearing account. You put it in the all-in-one, it's as available as any checking account, but it's doing something much more sophisticated than any checking account to date. I work in mortgage. This is what I do. I have access and awareness of every mortgage in the country. There's no question what loan I would get for my house. There shouldn't be for you either. It's not right for everyone though, because qualifying is difficult, all that stuff. But it is right for everyone to know about. So even if it's not quite time for you, call us when it is. We'd love to help you out.